Good afternoon, everyone, and welcome to today's conversation on the upcoming changes to FRS 102 and what they mean for the UK and Irish businesses. I'm delighted to be moderating a topic that's rapidly rising up the finance agenda, lease accounting compliance. As many of you will know, in March 2024, the Financial Reporting Council introduced a major update to FRS 102, aligning lease accounting more closely with IFRS 16. These changes take effect from the 1st of January 2026, with early adoption permitted, but readiness across the market remains mixed. The FRC estimates that around 3.4 million businesses across the UK and Ireland will be impacted, and for many, especially SMEs, this shift presents a significant operational challenge. Common issues we're seeing include a lack of complete lease inventories, manual tracking, reliance on spreadsheets, and a general underestimation of the effort involved in identifying and accounting for embedded leases. That said, this is more than a compliance exercise. Today's session is about how businesses can use the FRS 102 changes as an opportunity to enhance accuracy, streamline processes, reduce risk, and make better informed decisions through smarter lease data management. We'll also be looking at the role of technology and automation, including how AI can reduce manual workload by extracting key lease terms and improving data visibility. And we'll share examples of how organisations are already using software solutions, like those from MRI, to simplify the transition and drive long-term business value. We're joined today by Richard Olney, who is the Director for CFO Solutions at Grant Thornton, and Gavin Mays, who is the Sales Director for Occupier and Workplace Solutions in EMEA at MRI Software, who will be joining us on the conversation today. Welcome both to today's webinar. Richard, Gavin, please introduce yourselves.
Thanks, Jenny. Gavin Mays, I'm a Sales Director here at MRI Software, and I sit within our Occupier division. We cover all facets of real estate, including workplace, facilities management and energy management tools, but at our core is property management, lease management, and the topic today, which will be lease accounting, namely FRS 102. Richard.
Thanks, Gavin, and thank you, Jenny. Really good to be here. Absolutely delighted. Thank you very much. I am a director in the CFO Solutions team at Grant Thornton. I spend my time helping CFOs, FDs, and finance teams with complex accounting challenges. Of which, of course, lease accounting is a fantastic example.
Thank you both. So FRS 102 is a significant shift for many businesses. Gavin, how do you see the transition affecting businesses, particularly in lease accounting? I think we've got some technical issues. Bear with us. Gavin, are you there?
Jenny, yes, hi. Sorry, I appear to have some technical issues there, but I'm back in there. So I think we were talking about the shift for businesses and what they can expect to experience. So traditionally, lease accounting teams very much worked in silo. And there'll be a much greater need for cross-functional collaboration. So what we'll expect is much the same as IFRS 16, FRS 102 is going to be a team sport. So there's going to be multiple stakeholders involved in the process, from real estate, procurement, legal, and finance. So it's absolutely key that we foster a more collaborative environment. So with that comes a greater emphasis on integrated systems and data to support that. So we talk about property and operational teams now working together to ensure that there's accurate lease data at source, ongoing updates and validation across departments. So it's important that all of that information is centralized and workflows are automated on here as well. And this is not just a year one compliance exercise, but has to have a robust process for multi-year reporting under this standard as well. So important that there is that any modifications, renewals and remeasurements during the life cycle of those leases are managed effectively across those teams.
Thanks, Gavin. Richard, coming over to you, from a regulatory perspective, what do you see as the biggest hurdles businesses face with FRS 102?
Yeah, thanks, Jenny. I think from a regulatory perspective, the key thing is to just bear in mind that it's a project that you've got to run. It's actually a practical challenge. I mean, the sort of technicalities of lease accounting, there are certainly some technical corners there, and there are some technical aspects to it. But I would sort of agree with a lot of the things that Gavin's just said. It's really, you've got to make sure you run it as a project. You've got to think about, have I got some budget to do this? Have I got the bandwidth in the team to do this? what process changes do I need to think about? How am I going to make sure that my lease population is complete? I'm sort of acutely aware that, a lot of finance teams run pretty lean, on a kind of business as usual basis. And so a project like this can add a little bit of challenge if there's not much capacity in the team to soak it up. And I think the key thing is to really get ahead of it early, so that you're aware of that, and that you can plan appropriately to give yourself time to then make sure you've got the technical aspects correct.
Thanks, Richard. So we've learned a lot from IFRS 16, but there's still a steep learning curve in place for businesses. Gavin, in your experience, how have businesses used tech to overcome the challenges they faced with IFRS 16?
I can hear you now, Gavin. Yeah.
Oh,
Great,
good.
thanks. So Jenny was referring to kind of lessons that we can learn from IFRS 16. I think there's a multitude of lessons that we can learn and put into FRS 102 best practice. So historically, when IFRS 16 came to the fore, many organizations really did treat it as a kind of a finance problem, and really got those teams to kind of focus on, just creating one or multiple new spreadsheets to go and manage it. But it became clear pretty quickly that these finance teams became buried in lease agreements, trying to deal with lots of inconsistent terms, nuanced terms, and manual calculations, and with that came a multitude of challenges. So issues with version control, lack of auditability, and also a lot of extra time and effort to try and capture data retrospectively. So a lot of challenges around trusting that data. And good to get Richard's views on this, but we did find this did create quite a lot of strained, elongated engagements with auditors. And it proved quite expensive, actually, to try and retrospectively fix those errors when technology could have addressed those kind of in day one. So we've heard a lot about starting early. Really important to try and centralize all of your data quickly. Often the leases are held disparately in different regions, as well as the ancillary documents. Also very important to engage with your technology and auditors, vendors quickly. Those who have a proven understanding of the UK market. So that you may need to report to Scottish quarter days or UK retail accounting periods, and it's good that it has a system that is tailored specifically for the UK market. And also, as you're collating all of that data, use it to build a coherent data strategy so that you can future-proof for multi-years, rather than treating this as a kind of a year one compliance tick box exercise. And really, one thing we have learned is that FRS 102 is not a light version of IFRS 16. That the risks are going to be similar, but so are the opportunities. So having kind of the right tech and building a cross-functional process will really help, as well as starting as early as possible before deadline panic sets in.
Thanks, Gavin. And Richard, from your side, how can businesses avoid repeating mistakes from IFRS 16 with FRS 102?
Yeah, thanks, Jenny. I think echo a lot of what Gavin says. Again, I think number one, get in front of it early. I did work with plenty of businesses who were affected by IFRS 16 who really left it a little late, and that caused a lot of problems. So that's one of the first things is get in front of it. And so what does it actually mean to get in front of it? What do you need to know? I think step one is understand the problem. So you need to do effectively an impact assessment, so that you can understand how much you're going to be impacted, what's the scale of the problem that you're looking at, and then you can figure out a process to get it done. I think it's very easy to kind of put this in the box of a compliance challenge. I don't think it is. That's the lesson from IFRS 16 really, is that there's a lot of stakeholders that might be affected. There's a lot of things that you're going to want to think. So applying these lease changes will affect the way that your P&L looks. So if you've got stakeholders who are interested in that, and I imagine there may be many, thinking about covenants, and if you're in heavily into deals, or you've got exact compensation earnouts, or these arrangements, all these sorts of things, the impacts can be quite wide and varied. So that's why it's important to really understand it, have a think about how it's going to impact your balance sheet and your P&L. Think about data and people, tools, all these sorts of things. And just to underline something that Gavin said as well, I think with IFRS 16, a lot of businesses said, well, I'll probably be all right on Excel, to be honest. I can probably do it on Excel, and maybe, you can make that work on initial application. But I think to manage a lease portfolio on an ongoing basis, once you get a little further down the track and you're experiencing things like modifications or, new leases or terminations or changes in all these sorts of things, that can be quite difficult to manage. You quickly find the shortcomings of an Excel-based approach in that scenario. If you've got a portfolio that really demands a technology solution.
Thanks. And that actually leads us really nicely into our sort of next conversation point. So you both touched on this briefly about technology playing a pivotal role in this process. From a compliance perspective, and I'm sure you see this all the time, do you think AI tools are ready to handle the complexities of the new standard?
I think that's a really good question. I think it probably depends on the tools, Jenny, but certainly, the opportunities that are available with AI now, there's a lot of good stuff there. I think fundamentally it comes down to the way that you use these tools, and it comes down to the data that goes into them. I think there's lots of opportunity to use AI in collecting that data, but you've still got to treat it, I think, like a team member, or like a process that still needs some sort of scrutiny. So I suppose from my perspective, are the tools ready? The tools are certainly there. They're all sorts available. I think it's probably more a question: are finance teams, ready to use them and ready to use them in a way that makes the most of them, whilst also, recognizing that there are some potential risks there.
Thank you. Thanks, Richard. Just going to see if we can get Gavin back. Can you hear me?
Jenny, hi, I can hear you.
Hi, perfect. We just wanted to come to you around the role of technology and how it's played a huge role in streamlining accounting processes.
Sure.
How do you see AI and automation specifically helping with the FRS 102 transition?
Yeah, that's a great question, Jenny. I mean, AI is now ubiquitous in our everyday lives, whether we like it or not. So whether that's Netflix using an algorithm to recommend the next box set to watch, or if you're abroad and you get a smart alert from your bank about a potentially erroneous transaction, these are everyday and ever present within our lives. And actually, AI has become very embedded within our lease accounting capabilities. In fact, our first kind of AI-enabled capability was back in 2019. And to Rich's point, one of the biggest risks and concerns is around getting accurate data at source. So we used AI to help with that. So running a AI-enabled OCR over lease contracts, which are becoming increasingly unstructured, long, and nuanced, is becoming very, very helpful. So picking out all of those key data points, extracting your payment schedules, your renewal options, your discount rates, and the like, is significantly cutting down the time and effort to go and achieve that. So an exercise which may have taken months now takes days or weeks. So cutting down that time sometimes by up to 80%, but also increasing that accuracy and actually having a proven record where you can link straight back to specific data points in the lease contract is really helping in terms of that year-end audit process, so that you've got a proven, referenceable and auditable track record as to why those data points have been included. So that's one area that it's streamlining. Another area we touch upon is kind of smart alerts as well. So continuous compliance to ensure that it can flag any non-compliant entries in real time. Again, all of this capability learns over time, learns over repetition, and continues to reduce risk. And this is also coupled with the use of BI dashboard capabilities, tailored dashboards based on user roles to give real-time visualizations of any changes around FRS 102 as well. So accuracy is really important, and AI is helping with that, but it's also about scalability and insight. So it frees up finance teams to focus on strategic decisions and strategic objectives rather than spending a disproportionate amount of time chasing down lease contracts and chasing down numbers ultimately. So plenty of opportunities to free up finance teams to get on with more value-add activities.
Thanks, Gavin. And one of the key things is having your data in order. That is so important for businesses. So what I want to ask you is, like, how we know it's important, but how can businesses look at adopting a data strategy in place ahead of undertaking this project and ensuring the right people are involved? Richard, do you have any thoughts on that, just while we get Gavin back?
On the data, yeah, I mean, I think this is a really key point, Jenny, that you've got to get the right data, and you've got to get the right data in. From my perspective, I think that involves collaboration across the organization. I think finance teams need to bear in mind that they're going to be at the center of this, but in order to be able to have a complete lease population, for example, they've got to go and talk to people across the business, think about what's currently going on. Do they have visibility of all the leases? How can they get that if they don't already? That initial kind of piece of understanding the lease population is really important. And then, of course, the data is key to getting the calculations correct ultimately.
Gavin, have we got you back in the room? Can you hear me, Gavin? While we wait for Gavin to get back, I will move over to the next talking point. So the 2026 deadline is fast approaching for FRS 102. What we want to understand is what businesses need to be doing now to ensure they're ready. 6 months ahead, we're now middle of June. So Richard, what do you think the key compliance elements are that businesses need to focus on right now?
I think making a start, is the key point in order to be able to get there in the time.
Hi, Jenny.
Gavin's back. Sorry, would you want to?
Hi, can you hear us okay now?
Yes, I can.
Oh, perfect. Yeah, no, one of the key questions is that we're talking about how the deadline is fast approaching for FRS 102 and what businesses need to be doing now to make sure they're ready. So, Richard, you were just talking around the key compliance elements that business need to focus on.
So I'll just expand on that a little bit. I mean, I think in my mind, actually, there's a point here, which is, yes, it is a compliance thing, but actually doing a good job.
I think so. In terms of, so the question was around the deadline fast approaching. Apologies, I had a bit of a connection issue there again. So I think really important that organizations are, when they're looking at evaluating technology, are looking at building their individual use cases. So not just looking at features and functions, but looking at what are the pain points and what are the challenges that they're really looking to address. So it could be automating lease reclassification or modeling revenue recognition changes, whatever it might be, just to make sure that they are actually really focusing on the key points in hand. Over 90% of our clients will integrate our software solutions with their finance system. So looking at the best tech that has a proven track record of integrating with the wider ecosystem, and can make sure that can be an iterative process. So there may be some other third-party applications that you want to enable for greater collaboration. Looking for explainable AI, so AI tools that have a proven ability and a repeatable ability for automation and the efficiencies that you get beyond that as well. So I think there's a lot of areas that you can look at in that way, and ultimately just working with technology vendors who are understanding what are your key outcome and success criteria, and holding each party accountable for that. So looking at what the anticipated ROI is and holding those vendors accountable post live as well. And also the ability to get references and to speak to other clients as well, who may have been through this experience recently, just to give you the comfort and reassurance about the vendor that you choose.
Thanks, Gavin. And then Richard, did you want to expand on that?
Yeah, thanks, Jenny. Yeah, so I suppose in terms of the compliance elements and what would I be focusing on right now, I think it's getting an impact assessment done, making sure I'm doing an impact assessment, planning my project, and engaging with key stakeholders. And that will, of course, include auditors. It'd be good to understand what your auditors can be expecting in terms of the output of that kind of transition process, and moving to implement the amended standard.
Thank you, Gavin. Hopefully we've still got you there. Can you share examples of how you've supported businesses with IFRS 16?
Richard, where were we? Sorry, I've had ongoing connection issues, and I may have to dial out and dial in again. But yeah, let me do that.
So while we wait for Gavin to come back, Richard, do you want to talk about any further regulatory changes that you see on the horizon that may continue to shape the industry?
Sure, Jenny. Yeah, I mean, I think, it's a bit of a cliche, isn't it? But change is certainly a constant. I mean, I think these are pretty big changes for FRS 102 reporters. As far as accounting standard changes go, they're pretty significant. So I would hope that there's nothing quite so significant looming on the horizon. What is interesting is that the IESB have got their post-implementation review of IFRS 16 kind of in progress at the moment. I think we're expecting some consultation questions to be published later this month. So, just in terms of that wider landscape, it'll be interesting to see what preparers and other stakeholders in that process report as having been the effects. But yeah, I mean, I think, to be honest, the bigger changes a bit more, more broadly. The other things on the horizon for reporters will be, those ESG and sustainability reporting type things, type requirements coming through as well.
Thanks, Richard. And just out of interest, how do you work with your tech vendors when it comes to managing these regulatory requirements? What support do they provide for you?
Tech vendors, yeah, it's a great question. I mean, I think obviously I work in a client-focused firm, so we're always focused on the client. We really enjoy collaborating with partners who have a similar approach to supporting clients, and then we can work with well together. So in terms of our approach, we're looking for tech providers who know what they're doing, happy to work collaboratively, and are ultimately focused on helping to solve the issue for the client. Their aims in the process align with ours.
Thanks, Richard. Hopefully we'll get Gavin back shortly. Hopefully, yes. Before we wrap up, let's pick out some of the key themes from today's discussion. We have got time for Q&A as well, but from the conversation that we've heard today between Gavin and Richard, one of the clear things that we've identified is that the time to act and prepare for FRS 102 is now, ideally not the 1st of December. Otherwise, everybody will be working over Christmas to try and hit that deadline. The other thing is that having a clear data strategy in place is crucial. Understanding where your data sits and how clean it is will impact how successful preparing for FRS 102 is. And technology is... Hi, Gavin.
Hi.
Sorry, are you in a better location?
I am in a better location. I do apologise to everyone for the technical issues. Thank you for holding the fort, Jenny and Richard.
No problem. We were actually just wrapping up, but I did have a couple of questions for you that I did want to come back to,
Of course,
if that's all right. So one of the key things is, where were we? That's right. We were talking around data strategies earlier on, and wanted to get your viewpoint on how important it is for businesses to have we know it's important for them to have a data strategy in place ahead of undertaking the project. How do we make sure that is executed successfully within the business?
Yeah, absolutely. I think we've talked a lot about understanding where your leases are to start with, to make sure that you are collating and centralizing them. But there is a initial exercise of getting your initial FRS 102 disclosures out, but also you need to really view this as a multi-year program. So having the ability to understand who's out negotiating with your landlords, renegotiating contracts, the modifications, the renewals, all of those changes that need to take place, you need to factor that into an ongoing strategy so that you have a robust and repeatable process for that data to go into the system. I'm obviously got very much the technology hat on here, so I would be an advocate of AI helping with that, because that just takes away the heavy lifting. It takes away the human intervention, and as we all know, there is prone to be risks in terms of human errors and miskeys, which obviously have impacts on those calculations. So having that process so that all of those changes in any lease during the life cycle of those leases, goes through those tools, goes into a centralized technology platform, is going to help with that process. So, but Richard, you may have commented on this while I was away, but it would be good to get your thoughts in terms of anything I may have missed on in terms of that data strategy from an audit perspective.
Yeah, sure. I think you're absolutely right. I mean, I would agree with everything you're saying, Gavin. I think the thing to bear in mind is that this is a process you've got to go through you need to make sure you've got some controls around it. And that all speaks to the data integrity, the way that the whole thing is done. It is a financial reporting process, and so an auditor I would expect to be able to understand the controls you've got around it. So making sure that you've thought about where the data can go wrong, where the processing of that data can go wrong, where the calculations can go wrong. What are the points in this process that have propensity for error, and making sure that you're addressing those. And in my mind, it goes back to the point I made earlier. All this comes back to a decent project plan, understanding the scale of the problem. So do an impact assessment, get help if you need to. Talk to people who've done this before, talk to people who have experience, particularly with IFRS 16. And don't rely on your auditor to kind of do it for you. It's not really their role. So make sure you get the right help and think about it from that perspective.
I absolutely agree with that. I think as part of that data strategy from a technology perspective is I would take advantage of proof of concepts to actually get your hands on the solution, to see how that operates, to run your own data through that as well, so you can see your own data in action as well. That helps kind of build confidence and reassurance as well. And I think that's pretty key for user adoption and to kind of support that long-term outcome as well.
Thanks, Gavin, and thanks, Richard, for that input as well. One of the other things we were talking about is obviously getting ready and preparing for FRS 102. Gavin, do you have examples of how you supported businesses with IFRS 16 and how that could also be applied to FRS 102?
Yeah, absolutely. So to cast my mind back, probably a good example would be a retailer that we worked with about 3 years ago. They UK operator, had around 70 stores. They had some equity backing, so they were projecting kind of doubling that store portfolio over 24 months. So they were looking for a solution that was scalable, but they were also a little bit nervous. They were a little bit nervous in terms of their capacity. They had a lot of change in their business. They were in a period of growth, which is great, but obviously with that comes a lot of demands in terms of that particular finance team. So they were looking at any ways that they could do effectively more with less. So we quickly identified that data was going to be a challenge for them. It was very important that we built confidence with them. We looked at our lease abstraction tool, integrated with our property management system, and thought that was a very good fit for them. There was a little bit of hesitation. There was probably they didn't feel particularly confident about evaluating a solution, especially AI, and putting together a business case internally to go and get approval for it. So I think there was definitely kind of an understanding that it could help drive some of those efficiencies and streamline some of those processes, but we needed to help them manage that internally. So a couple of ways that we did that. I touched upon the proof of concept. We gave them access to the solution in a sandbox environment. We ran through leases with them. They got the ability to interrogate those leases through our large language models that are embedded in there. We also did a lot of work in terms of what would be their expected outcomes from that solution as well. So we have ROI calculators on there as well. So what are the expectations pre-implementation and what are the expectations post-implementation in terms of some of the efficiencies they would get from the automation within the system, and they very much held us accountable as we moved from into a business as usual account management relationship. We also gave them the opportunity to speak to like-minded clients we've got a kind of a large retail base, so they spoke to other retailers who had recently been through that process, and we also invited them to a number of industry events that we had as well, which we hold throughout the year as well. So they got a good feel of kind of our clients and really some of the journeys they went on, and some of the what went well and the areas that they can learn from as well. So it's really about ensuring that they were comfortable and assured about that the solution and indeed the partner was right for them.
Thanks, Gavin. Some really interesting case studies there. So before we move over to the Q&A, let's pick out some of the key themes from today's discussion. Between the conversations that have taken place today, we know the time to act and prepare for FRS 102 is now, not in 6 months' time. Having a clear data strategy in place is crucial. Thank you for revisiting that with us just now, Gavin. And understanding where your data sits and how clean it is will impact how successful preparing for FRS 102 is. And finally, technology is going to be key. So choosing the right vendor to support you on your journey is going to be crucial. So please make sure you have the right, a clear vetting process in place for that. So Gavin and Richard, Gavin, I'll come to you first. What's one piece of advice you would give to businesses looking to embrace technology and streamline their lease accounting processes as they prepare for FRS 102?
Yeah, I mean, I would say that it's another work stream that organisations and finance teams particularly have to deal with. So it's an opportunity to avoid creating more silos, to create even more collaborative ways of working, particularly with the property and finance teams as well. So I would say it's an opportunity to embrace kind of more efficient workflows and the ability to get kind of real-time updates and better audit trails. And this can be kind of a pilot for other areas of the business as well, where that can also be adopted. So I certainly think it's an opportunity as well as a challenge.
Thanks, Gavin. And the same question to you, Richard.
Yeah, I would just, particularly that last point that Gavin made there, really just underline that it's an opportunity as much as anything else. I mean, I think people, particularly with financial reporting and compliance requirements, it can be pretty easy to get bogged down and just say, oh, it's just something that we've got to do, but actually, in order to apply this standard right, and we've got to hope that the standard setters have good reasons for putting them in place, and hope that there will be some benefit to businesses and stakeholders and users of the financial statements. In order to do this, we've talked a lot about data integrity, data quality, and we all want to run our businesses using data, using something that we can hang our hat on, don't we? So, to get all that in place, to get a process that's efficient and accurate, timely reporting, these are all the things that actually have a commercial benefit. They enable better decision making, faster decision making, and they can free up, as I think Gavin's mentioned earlier, less time spent on manual tedious tasks means more time available for the insight-driven stuff that's really going to help to move the business forward.
Thanks, Richard. So we did have a couple of questions submitted to us beforehand, before we went live. One of the key questions was around security considerations. What security considerations are important when using cloud-based lease accounting platforms? Gavin, I'll come to you with that one.
Yeah, absolutely. I mean, we've got a common platform across all of our solutions, and we've got sort of hundreds of different solutions on there as well. I think it's important to have a very secure environment, but also an environment which has the associated accreditations around it. So from core reporting and security standards around SOC 1 and SOC 2, but also from a data center environment, be adhering to ISO 27001 is very common questions that were asked, but it really is kind of quite a broad umbrella and should give organizations the comfort that we have the right security and controls in place to go and manage those. So I think they're kind of some key areas to look at.
Right. Richard, do you have anything to add to that?
I think that Gavin's expertise around technology and security and cloud-based platforms far exceeds mine. So no.
Okay, no problem. No, that's fine. I think we can move on to the next question. And Richard, I'll come to you first with this. So how can technology help with the classification of leases as finance or operating under FRS 102?
Yeah, it's a good question. I mean, I think the thing to bear in mind around these changes is that they particularly change the dial move the dial, let's say, for lessees. So it means that a vast majority of leases will come onto the balance sheet. So we'll have a right of use asset and a lease liability for those leases. There is still that operating finance lease distinction for lessors, but the process for assessing that, remains the same. However, the overall point around technology and lease accounting is that, in order to extract the data, particularly if you've got, high volume of leases, technology can be really helpful in getting you the data that you need to make those assessments if you're a lessor, or to get the right data points if you're a lessee and you need to record those balances. So what do I mean by that? I mean, all that stuff is in the contracts mostly. So it's all about getting that out of the contracts efficiently without having to have somebody spend days of their life trawling through many pages of the lease contract.
Thanks. Gavin, did you want to add to that?
I'm probably answering the same response to you, Richard, but I think that was pretty comprehensive, actually. No, I completely agree with those points. Yeah, so nothing else to add.
Great. Coming on to the next question that we had submitted. How can technology help identify and track embedded leases in service contracts? And Gavin, I'll come to you with this one.
Yeah, sure. So, ultimately, if we take about abstracting specific data points, this technology can be trained to pick out any of those specific points. So I think there's one element in terms of picking out those specific data points, but also from a wider schema, there's an increasing use of, and I touched upon this earlier, large language models as well. So having really granular, detailed searches. So it could be about, those service level obligations. It could be about force majeures, whatever it might be, that you can actually group together a large set of data and schema and get those insights with very, very few clicks. So I think that's a great example that you've given, Jenny, but it's one of many that we can do. And what we're increasingly finding is that our clients give their auditors direct access to this solution. So what does that effectively mean? It means that as they're auditing the FRS 102 reports, they can also tag back any specific data points to those specific clauses within the contract, or indeed dates or financial figures on there as well. So really powerful, really cutting down on the amount of kind of back and forth between those two teams, and it actually makes for a lot more pleasant experience, because I'm sure, Richard, you'll agree that you want to be discussing a lot of more value add strategic and advisory services, as well as just the core audit services as well. So I think it's helping to have a greater collaboration between the auditors and those organizations as well. But Richard, really be interested to get your thoughts and views on that.
Yeah, absolutely. And I think that this is one of those quite interesting issues, this whole idea of there being an implicit asset in the lease rather than, or, as well as an explicit one. And I think, I've worked with businesses before who've had to deal with this challenge, both from a lessee and a lessor perspective. So I think, as Gavin said, there's a lot that can be done with technology. I mean, ultimately, it's about making that process, that lease review process, more efficient. So there's sort of two components to it in my mind. There's how do you identify the areas in your business where this could be a problem? How do you, that's going to involve talking to people. It's going to involve thinking about it. It might involve doing some analytics around things like, payments, regular payments, fixed payments that go out every month might be a good way of highlighting leases, for example, that you might not know about. And then the second piece is actually facilitating that review of the lease contracts. And we've talked quite a bit about that, obviously, in terms of being able to abstract that information using smart tools. So it goes back to that. It's being able to say, well, this is the kind of information I need to know. These are the criteria in the standard for determining whether or not a contract contains a lease. And then let me use those tools to get that information quickly, and then document my analysis pretty comprehensively.
Thank you both for that. One for Richard, actually. Where do you see the biggest risk of misinterpretation or misapplication in the new lease accounting requirements?
That's a very good question, Jenny. I think completeness is a big risk, to be honest. I think definitely. I think that other pitfalls around would be, things like the lease term. When does the lease start? When does it finish? That judgment around, well, do I include that renewal period? How many renewal periods do I include? Is my lease actually an evergreen monthly lease, or is it 25 years long? That's I think that there's a bit of judgment there, so you can go wrong there. With IFRS 16, I think a big big area that was important for businesses with quite lengthy and sizable leases was the incremental borrowing rate. I think that's a bit easier under FRS 102. The FRC have kindly included some relief to make that a bit easier with the obtainable borrowing rate. And I think also the ongoing piece, actually. I think we often focus on, day zero, the transition, but then that ongoing compliance piece, which Gavin, you mentioned your experience with that business that you referred to earlier. How do you make sure you manage it so that you're capturing modifications and accounting for those in the right way? And there are some technical corners around modifications and how you treat them, whether you treat them as a new lease or whether you adjust the lease liability, whether you have to use a revised discount rate or not, or those sorts of things. So yeah, but there's definitely a few technical corners, and I think that comes back to that's why it's important to kind of make a start on it, and to do an impact assessment so that you understand the level of complexity that you've got in your portfolio and you're identifying where it can go wrong, and then you're able to deal with that and manage it.
Thanks, Richard. Another question that's just come through. How can businesses measure the success of their FRS 102 transition efforts? What KPIs should they be tracking during this process? Gavin, I'll come to you.
Well, I think in terms of KPIs, they've got accuracy and completeness has been a bit of a theme that we've had throughout this session. And the real proof is in terms of once those disclosures have been made, the efficacy in terms of getting a sign-off process for those to be concluded with the auditors, really. So I think it is very important to kind of track accuracy, very important to track if there is any potential inaccuracy on there as well, what lessons can be learned from that. So I think other KPIs, or it should be in terms of not just day one, not just the checklist of yes, we've done the reports, let's all pat ourselves on the back, but also what does that mean in terms of year two? What does that mean in terms of those evolving leases, the modifications, the renewals, the remeasurements, all of the changes on there? How effectively is that, transcribing from the team on the field to actually finance, putting that into their reports and getting accurate data on there as well. So again, having that integrated platform will give you the ability where you should have the reporting to be able to go and track against those effectively. Richard, from your side of things, what KPIs do you recommend? Look out for?
Yeah, I think, well, as you say, the proof ends up sort of being in the pudding, doesn't it? With the, how's my audit process ultimately? So what are the things what are the sort of input measures to be trying to hit on the way through? I think part of that is about having a roadmap, and then you can measure yourself against how you're going against the roadmap. So, the kind of key stages of the implementation process, the key milestones that you need to reach. Things like, have I got my lease portfolio? Have I identified them? Have I got everything? Do I know I've captured it? Have I ticked it all off? I think in the run up to the transition, it's all about kind of keeping on track, isn't it? So those KPIs around, are we hitting those milestones is really key. And then as you say, day one, are we reporting on a timely basis? Are we making sure it's updated? How do we know? What sort of, how looped in are we to the the procurement process, such that we're being in, we're looped in. All that sort of stuff can be designed quite well, I think, in terms of processes and looking at what current state is and what future state needs to be. But at the risk of sounding like a broken record, it kind of comes back to that point around starting the process, understanding the problem, and then just cracking on.
Thank you both. And actually, starting the process is going to involve people from many different departments coming together to actually make it a success. And that's one of our final questions that we've got is, how can businesses ensure cross-functional collaboration between finance, legal and property teams during this transition? Richard, I'll come to you with that one first.
Yeah, it's a good question. And obviously, people know their own businesses better than I do, so I'm sure there'll be a lot of situational things and they'll want to think about it themselves. I think my experience would be there's an education piece to some degree. I appreciate that's a tricky needle to thread when you're talking about financial reporting requirements and challenges. So, but it ultimately comes down to talking to people and making sure that they understand not just that it's a compliance thing, but what the impact might be, how it's relevant to stakeholders, and how doing a decent job of this and getting it right can benefit the business, and obviously the risks of not doing that. So yeah, that would be my advice. Is it's ultimately about talking to people, and there are many ways to do that, but I think that education step is key.
I completely agree, Richard. And I think there's going to be touch points throughout all of this process. And so it's really important to engage all of these stakeholders and to be very clear in terms of your data strategy, where those touch points are. So that's going to help with a number of areas. So in terms of really building out those effective cross-functional processes, everyone needs to be very clear and aligned in terms of where their roles and responsibilities are, and where they need support from the business, and indeed support from a technology vendor to make sure that they're getting most out of working in an integrated and collaborative way.
Thank you. No, that sounds great. So we've just had a couple more questions come through whilst you were just talking there. First one is, how do businesses manage the impact of FRS 102 on financial covenants with lenders, particularly when dealing with leases and capitalisation of assets? Are there strategies to mitigate the potential financial strain? Richard, I'll come to you first for that.
Yeah, thanks, Jenny. And look, it's a great question. I think that this is a key thing. These financial reporting requirements, on the one hand, they change nothing in the business, but on the other hand, they change an awful lot on the balance sheet, and they change EBITDA and the way. So absolutely very relevant. I think and we obviously work with clients a lot, and we've got some debt advisory specialists in our business. I think that the general approach is it's about talking to the lender, and the first question that they will ask is, well, what do you think the impact is going to be? So really, it's about coming to those conversations prepared, so that you've done an impact assessment, you know what it's going to look like. So then at least I think you're on top of it and you can have a conversation. But certainly, it's a difficult issue.
Great, thank you. I've got one technological based question for you, Gavin, if that's even a word. So apologies if I've just butchered that word. For businesses transitioning to FRS 102, what are the key technological advancements or tools that can help ensure a smooth transition, specifically when managing complex lease portfolios or large-scale financial data?
Yeah, I think it's a great question. I think by their nature, leases have become a lot more complicated. They've become a lot longer. There's a lot more nuanced clauses that are in there as well, and it's really difficult to keep on top of those, and really difficult to manage those, as well as understand the impacts from a lease accounting report perspective. So having the ability to be able to collate that information, to be able to cluster it together through a few keyword searches is very helpful. Also, the increase in adoption of smart alerts. I think I touched upon this earlier in terms of any potential non-compliance. So actually the AI is actually driving some of those calls to action, rather than it being kind of a push sort of mentality, sort of a push-pull mentality as well. So there are a couple of areas that I think create kind of a lot of efficiencies. I also think just there is so much data and so much information out there at the moment that to actually simplify it in terms of call to action. So having tailored dashboards, a CFO's dashboard is going to look very different from the finance manager's dashboard. There will be some commonality, but the CFO may want to understand from a much more strategic perspective, and there'll be more operational interests at that other level as well. So having the ability to get those insights, to get those call to actions, to get those smart alerts, whilst there's all the other day job activities going on, is going to be very helpful to make sure that you're mitigating any risks as you're managing this process year on year. Richard, anything to add on to that?
I agree. Very comprehensive. No, I absolutely agree. Yeah.
Thank you. And before we wrap this live session, I've got one final question for you, Richard. How does FRS 102 affect a company's approach to revenue recognition from lease contracts? And how can they prepare for this change in the context of long-term lease agreements?
Okay. Yeah. Good question. And there's a bit to unpick there. I don't want to expand too much on technical points, but yes, I mean FRS 102, the other kind of big piece in the amendments, these triennial amendments, is revenue recognition. So that is changing, and there are some ways in which they interact. I mean big picture, if you're a lessor, recognizing revenue from leases, the accounting does not change much there. Things you want to watch out for are sale and leaseback arrangements, a bit more guidance around those, and then the revenue recognition in general does change quite a bit. And while as the leases are moving to align broadly with IFRS 16, so the revenue recognition under FRS 102 is moving to align broadly with IFRS 15.
Excellent, thank you. And I think that brings us to a close on today's live session. So thank you very much, Richard and Gavin, for being with us today. Apologies for the technical issues earlier on in the call, but I feel we have had a very strong conversation. I definitely feel prepared for FRS 102, even though I will not be managing the project. But yes, I think we've had some fantastic insights from Gavin and Richard today. So thank you both for joining.
Thank you, Jenny.
Thanks, Jenny. Thanks, everyone.